Well, hello. Good afternoon, Maverick Traders. It's midweek update time. Joe with you here. It's April 6th. I was pretty excited to do the end of day post yesterday because we had a very interesting market where we confirmed a bull pullback and then kind of gave it all back. I call it a little bit of a flip flop. You guys probably have heard that a few times, especially if you've been listening to my updates. But I was excited to get into today's class to see what would happen, and lo and behold, we get that gap to the downside. These markets don't take time to sell off, do they? They seem to basically react. It seems to be a situation where we'll buy, we'll buy, we'll buy, we'll buy, we'll come off the bottom, so on and so forth, and then once the buying stops, it's not like it rolls over and sells off. It just drops, and it drops hard. So we'll see where we're at and kind of analyze what to do next, right? That being said, guys, this is opinion. Please type into the questions box any sort of comments you guys might have or questions, but make sure that's all this is. Take it for what it is. Take responsibility for the outcome. You know the deal. Let's get into it. So the markets move lower this week, led by the mega cap companies. I like to call them the mega caps, right? The ones that make up the majority of each sector. Large companies have made up the most of this week's volatility as well. So we have seen a pretty substantial move to confirm that pivot point from Friday, and then yesterday's move was big, gap down, so on and so forth. This is those specific companies. I'm not seeing too much outside of what's been strong. So your utilities, your materials, so on and so forth, things like that, continue to stay pretty strong, even in these corrective moves. They don't correct too often, and when you see the sectors that have been leading, it is the utilities, energy, and materials, and I don't think that's changed. What's causing the noise are those gigantic mega caps. Tesla, Elon Musk comes out and buys Twitter. I'm sure that's not very neutral. There's probably some sort of agenda behind it, whatever. We could have cocktails and talk about that one, right? But it's a huge move. That's billions of dollars being put in and back and out of things, and it's going to cause market movement. So Tesla moves, Twitter moves, Google moves, Amazon moves, Microsoft moves, and stuff like that. And then they completely correct. So that's kind of the loud noise has predominantly taken news headlines. The underlying message, folks, is this slow, steady climb in protective sectors. Utilities, energy, materials have been very steady, not the tumultuousness that we've seen in the tech and in some of the communication services and some of these outlanding consumer companies. So keep that in mind. So bullish sentiment, I'm going to say it's bullish based on the price action into the end of the quarter. And I had a really good couple of comments. And, Joel, you're a buddy of ours that's in this class quite a bit. He sent me an email and said something about, could this be window dressing for the end of the quarter? And it wasn't just him. We'd had that conversation, about a week before, and it's absolutely could be a big part of it. This big surge off the bottom, moving into buy, buy, buy. We're invested into quarter number one of 2022. Where we go from now doesn't matter. So there's that part of it too. So that the feeling that Rob's talked about and Darren have mentioned about this, we feel bearish, although things are bullish. It's justified. I mean, understand that it just depends on when. So we'll see what happens moving forward. So inflation remains high. Economic data, no change in the U.S. economy. Understand, folks, if I have to paint a picture, and I don't want to be this guy because I do lean to the bear side, especially lately, we are a lot worse off today than we were yesterday, if you will, economically. The pressures of I should say, inflation when it comes to commodities, energy prices, gas prices, oil prices, versus products, things of that nature. Yes, I mean it's silly to me not to just say that where we were 8 months ago, a year ago, we're better off now. No, that's absolutely false. We're actually worse. Now we also have an increasing dollar, meaning it's going to cost more to borrow the money to buy these products. So it's not in a very good spot, but the markets don't seem to care. So we got two things: how we feel, which obviously you know where I feel, and then what the markets are doing. So it just depends on what trigger you're willing to pull at what time. That being said, there are definite opportunities in all three directions, up, down, and sideways. I like these. I pulled a couple from Rob's update on Monday. I think there were carryovers also from Sunday's trading room, but I did like them, along with the trades we talked about last week, folks. Intel, Toll Brothers, APLS, T-Mobile. These are great trades that have seemed to do pretty well moving forward. So let's jump into the bull side first. APLS, it's a pharmaceutical company, a beautiful breakout ascending triangle above the 55 level. I know it's pulling back today, folks, but it's still bullish. Just because we're having a bearish move today doesn't mean that this chart isn't completely bullish. And that's kind of what I wanted to address when we get to the overall markets themselves, because it's in this wishy-washy spot. However, this is correcting based on the market's correction, but it's in a better place. 55 is a good support level. Heck, this thing could actually retest the 50, and I'd be fine with that. Or $50 is what I mean by that. And it's also the 20-day moving average there. And I'd still be fine with it as a bullish setup. So pretty decent. It's in the pharmaceutical. It's a $60 stock. Something maybe to look at, something diagonalized. Now, T-Mobile has just been holding on into a sector that's been absolutely all over the place and just getting slaughtered. AT&T and Verizon, we've seen it. Some of these larger communications companies have been getting smoked, but this just holds true. And I do really like the pattern over the last since this last gap. I really love this. So it's got this nice little channel, never really breaks its gap, retests it, staying nicely above that sloping upward 50-day moving average, and then creates this cool little ascending triangle pattern over its last pullback, and so on and so forth. And then it breaks out. Don't worry too much about if this is going to hit 135, 140, so on and so forth, but being above 130 moving forward, diagonalized, great trade. It's just cool to see something staying strong in an overall sector that's not doing very well. Keep that in mind. This is outperforming, so something maybe to tuck into the bull watch list. Once again, brought up by you guys in this class. I love this class. All right. Yeah, I'm biased. Let's move to RRC. This one's really cool. Now, there was another energy company. It's also on the list that I was going to put up. It was one right below this, or I think before it. They have the very similar chart pattern. I just chose the one that looks like it's a little bit more of a consolidation more than an extension of a triangle breakout. They're both good. So, folks, on that list I just showed you, just go through all of them. But I liked how this broke out above the 30, retraced off the 20, and take a look at the last few days. 1, 2, 3, 4, 5, 6, 7, 8 days, and it's just been chomping around between 32 and 30. But understand that the markets are down significantly this week. I was running the numbers. You'll see it here in a minute, but they're down quite a bit, even with that good move on Monday. And this just it's not even head faking. It's sitting right up above that 31 level, looking like it wants to move even higher. And it's in the right sector, isn't it? All right, moving forward. Let's get to some sideways stuff. I've left them off the list, but I decided to kind of get into it and go back and see what the rest of the guys here are looking at. And I do like McDonald's. I think it's cool because it's holding in between the 245, 250 mark. If I was error to one side, it would be to the upside. Maybe you break out above 250 to 255. But if you wanted to condor this, a 255, 260, 245, 240, a targeted butterfly of 252.5, somewhere around there. And I'm not talking, I believe McDonald's probably has weekly options. Gosh, I should know that, but go ahead and check. But this would be something to take a look at moving sideways, depending if these markets want to continue to play this game of, do we go higher or do we break lower? And it's been a little bit difficult as of late. Towards the end of March, those last couple of weeks of March, it was just the markets went straight up. Quarter ends, we get up to a resistance level. Today's action is silly. I mean, we'll see here in a second, folks, but the VIX is up 17% in the last 2 days. And the markets didn't pull back, they dropped, they fell. The day's not done yet, so we'll see where it goes. But in a stock like this, it seemed to absorb most of it. I mean, I know that's a $5 range, but it did pretty good. So keep that in mind. Playing it between the 245, 255 level might be something fun to play with moving forward if you guys want something sideways. But I wouldn't do it more than a week out at a time. I mean, I know it's Wednesday. I don't know if you could do Fridays and get any sort of money on it out of it, but maybe a week and a half, so on and so forth. So Dish is the same. This got pretty tight between the 32-30 level. What I like about Dish is the price. It's a lot different than McDonald's if you guys want to swing the larger bat, but it's been pretty consistent over the last little bit. So I like that. I like that a lot. It looks like it's pulling back a little bit now. So markets, but if you really wanted to wait, see what it does here at the 2050 area, these two moving averages. Or if it goes back down to the 30, then I'd be a little bit more cautious, meaning I'd like to see a confirmation and a move higher. Let me get my pin out. I'd like to see something, more like this, or maybe this before I would get into something sideways between the 32-30. But wait for this to stop moving lower before you get into it, unless you want a butterfly between the 30-32, or condor, excuse me, between the 30 and the 32. That'd be fine. But if you wanted to get real tight at the 30, 31, 32, or whatever Dish offers, then you might want to wait a little bit. But there is plenty of different choices through there, I imagine, in a pretty cool sideways trade. On the bear side, yeah, it's going to be pretty obvious. We've had a pretty bearish week so far. Toll Brothers is just a beautiful trade brought to us last week by my amazing Wednesday class. You guys are great traders. Descending triangle pattern, talking about a break below that. Let's take a look. Wednesday, Tuesday, Monday, Friday, Thursday. Okay, so we were looking right around here as this was going to roll over and break down, and it sure did. Absolutely broke down on Thursday, and then Friday it hesitates. Monday didn't participate, and it's rolled over. So awesome trade. Great work. Hopefully you guys are in it. If you're not in it, I like it now. I think it's an awesome trade. It's going to have some problems. This is a consumer cyclical residential construction. We know that it's going to cost more to build stuff because of the price of the basic materials on top of which the availability of them, and we should see the housing market slow down with rising interest rates and inflationary pressures. So I don't see this having very much leeway to the upside. So Toll Brothers still a really good trade. Awesome job, guys, for bringing it up. Let's get to Overstock. This is another one now. I do believe it's got a little bit left. I'm seeing kind of this really slight head and shoulders. I do love this neckline here, but I don't like this one. However, it looks like it's below that. Let's see if I can't hold my shift and get a straight line. There it goes. Looks like we're below that right now. So if this could bleed lower, we've got a target down here at about 35. That's pretty good money, 36. Or it's just going to continue down with this bearish trend. So I like Overstock as well to the downside. In the last, but not least, and guys, you could probably throw a rock and hit a whole bunch of bear trades. But Wayfair. Wayfair's really neat. Looked pretty good. Bear rally, 2 days up, hits the falling 20-day moving average, rolls over right there at 120 mark. I'd like to see a little bit more penetration below that, but I'm just going to kind of throw that out because when you get this little bit of a push-pull, and it did it before, see this? Yeah, geez, we could even make this argument. It doesn't do it for very long, does it? It's a little bit of a hiccup, and then it falls. A little bit of a hiccup, and then it falls. So I'm not too worried about, hey, if you get into it and you see this big candle here, oh, geez, well, if it's going to continue its pattern, I imagine it's going to be a little bit more pessimistic than optimistic. But diagonalize it. Target butterfly. You don't have to do anything outside of that. All right, so let's get into the fun part here, right? This is the market analysis. Now, I always like to take these based on what the week has done so far. So I basically take what it's up or down today and subtract it from the week, or add it to the week. In this case, added it. Now, the diamonds, the S&P, and the Qs are all down. The Qs down the most, which they should be because they had the biggest bounce coming off of after Friday into Monday. Same with the Russells. So keeping both those in mind, it's kind of just following suit. Oil dropped a little bit, and gold's just hanging in there. So I'm not getting too much out of that. But commodities are going to do what they're going to do. Especially, I think there's going to be this area of the war that's just going to impact it. And I don't think we're going to see a fair price when it comes to any energy, folks. This is my 2 cents. Oil, gas, natural gas, heating, electricity. I think it's just going to go all over the place, at least through the summer. I don't know if you guys have seen it, but here in Utah, we've got about an 18% increase in our power bill. It's been crazy. So now here's what I'm talking about. This is what's so funny about those charts, and it took every fiber of my being yesterday and the end of day not to say that we're going down. But when you have this beautiful confirmation Marubozu close and then a candle that completely erases it, the volume about equal, a little higher. But I just didn't see any sort of follow through. It seemed like that this buying pressure just ended on Friday. You had a little bit of fall over come Monday morning, and then here we go. But the problem is when you get these drops, they're so difficult to calculate Because when you get a drop like this in any markets, and now guys, think about how the markets move. There are hundreds of thousands of stop orders. And when those get triggered, and they can be triggered a lot faster with a gap lower. When hey, I'm going to put a stop 10%, below my ABC stock, and when it gaps down 15%, it triggers not only yours, but the 5% below you as well, and it creates a massive buying order or opportunity. And so what you'd expect after this is kind of a whipsaw effect. It gaps down and has this big green candle that comes back up. Now, unless there's no more orders to sell, then it will gap again until it hits this level where it flushes things out. That's kind of the theory behind what I'm seeing here. So the people that have purchased here aren't being flushed out yet today. Meaning, now I'm cool. I'll just hold it. I don't care where the markets go. But the markets did stop purchasing. And that's what I'm going to call today's move. This isn't a gap down because of bearishness or fear. It's just the purchasing stopped. So we'll see where it goes, because it's at a convenient level below the 200, but still above a rising 20-day moving average, and it's 50. So, folks, this is a very ugly looking bull pullback. I hate to say it, but it's still an ugly looking bull pullback. Going on to the diamonds, same idea, but take a look how tight this got. Right at the 2050 crossover, gaps down. I mean, these percentages are in for a reason. 2.5%. I think this is what this is at. It was 1.5 for the week. 2%, just over 2. So we'll see what it does at this point. Does buying come back in? Are we reluctant to sell anymore? I don't really care. I don't know. But that's kind of where we're sitting. The Qs, on the other hand, and I made mention of this yesterday in the end of the day post, looks a little bit more ominous. I know this is a very aggressive move. It looks amazing. It broke its 20. It broke its 50. It's its 200. But it didn't do what the others did. It never cleared previous resistance. It never did. And it's rolling over. This looks a little bit more ominous. I think this has a little bit more to give up than the others. I still think that tech is the leader when it comes to weakness. And folks, it has been. Every time we get the market correction, it falls. The problem with this is it is involved with the 6-7 largest companies on the planet Earth. So when you get a move from Elon Musk, yes, it will move the markets higher. If you get a move from Google, yes, or Amazon, yes, it will move the markets higher. Now, it's not an equal representation, but it's enough to really skew what the markets do on a day-to-day basis. Be careful of that if you're a day trader. Okay, enough said. Enough of that. Now let's get into some economic numbers, and there's not much out there. Rob made mention on Sunday, and Darren were talking about, haven't really heard from the Fed in quite a while, and now we've been hearing a whole lot from them. They're super hawkish. They're super worried. They want to be a little bit more aggressive. Janet Yellen just came out a few hours ago, folks, saying that this Ukraine thing is going to have serious repercussions, maybe not immediately, but down the road. So don't think that, hey, all this commodity problem mumbo jumbo's gone. It's just starting. I know that's all doom and gloom, but hey, they got to err on the side of caution. However, folks, that's a lot of material being muddled. And it doesn't affect the U.S. directly yet, but it sure does affect some of those larger countries in Europe. Germany, is a lot of the dependency of oil comes from Russia. So, think about that spilling over moving forward. Factory orders, flat. Foreign trade deficit, looks like it's slightly higher than that. I mean, that number kills me. ISM services number, pretty much in line. We have the FOMC minutes. I do think that FOMC minutes is going to be listened to a little bit more than people think, due to the fact we don't hear so much from the Fed looking very anxiously into next Fed announcement or policy change. So jobless claims, continuing claims, we've seen a little bit of an uptick and a downtick in that consumer credit wholesale inventory. So it's pretty light this week. There's not much to go on. We'll just kind of have to play it by ear. And folks, I'm really not taking too much into account outside of where we're at, because there's really nothing out there that's changed my view, and there's nothing really changing our economic outlook, so on and so forth. So we're kind of where we were last week and a week before. It just depends on what these markets really want to do with it. Now, guys, I added the poll. Let's hope this works. I got it. Okay, let me go ahead and launch this. So we're in a really cool situation, because it's going to be pretty interesting to what you guys think. We went right up to a pretty substantial point. I didn't think we were going to get there that fast. Excuse me, folks. I didn't think we were going to get there that fast, but we did. And we got to some significant levels. Getting above that those moving averages. And I didn't have the 200-day moving average. I don't really look at it, but it was funny because I think it was a class ago or two classes ago. One of you guys mentioned, hey, throw it up there, and I did. And I was like, wow, that's pretty interesting that it got right up there at the end of the quarter and just parked itself. There's a reason why it does that. So it's just the outlook moving forward is going to be kind of hard to do without including some sort of price action, because I'm not getting sort of any sort of confirmation with outside signals, meaning outside economics, what's going on with the war. There's nothing really agreeing with my bearish outlook, but at the same time, there's nothing in the same information that's keeping me from allowing me to go bullish. So I'm in this neutral standstill with myself versus what's out there. So I just need some sort of umph, and I'm not getting it in either direction. And it doesn't seem like the markets are either. All right, where are we at here? About a minute, 15 seconds into it. 75% of you guys came right out and started clicking buttons pretty fast, and now it's held up. So maybe we'll just cut it there, because this is pretty funny. Let's close the poll and share it. I shouldn't say funny, but interesting. So 47% zeros and then -1, but we had 11% at -2 and 26% at +1. That's just zero, I guess. That's kind of how I have to go from that. Yeah, it's got to be zero. Well, 0.5 plus 0.5. How about that? I don't know. It's pretty close, but pretty much flat across the board. Thanks, guys. All right, so I am going to stay at a 0. This was tough to do, folks, because when it came to my monthly outlook, I went from a +2 to a +1, and the reason why I'm doing it is because of just price action. It's a gap down. It feels, here's that word again, it feels a lot more ominous than just a pullback here. It does. Once again, folks, it took every bit of my being yesterday at the end of day post not to say we are going down hard tomorrow. I just said, hey, we erased what we had. What drove it up is just drove it down. We'll see where we go. But here we are. Now, it's still above the 20. It's still above the 50. This is technically just a gap down pullback. And we've seen these markets do this before. If you guys can just shrink your eyes down, I should have done this before, but where was that? I just saw it. Oh, I thought I had a gap down pullback. Here's a gap down, pulled back, and then it gapped up again, didn't it? But then it rolled lower. So, here's a gap up that moved back down. This gap's down. I wouldn't be surprised to see some sort of an attempt to the upside over the next couple of days with no news, meaning no bad news, nothing like that. Just let it sit there. No Elon Musk, none of that stuff. If the markets are just left alone, I wouldn't be surprised to see a little bit of a climb back, at least above that 200-day moving average. That's my opinion. Doesn't matter what happens. We'll see. Okay, so that's kind of where I'm at. Move on to our sector analysis, and you guys are going to be shocked to know what's the strongest and what's the weakest. Well, utilities, strongest. Technology, the weakest. Now, so far, utilities have come off pretty hard, and usually when the markets correct like they have over the last couple of days, it's the flight to defensive, isn't it? Flight to safety. Communications down 2.5%. Folks, consumer, this time I use the consumer cyclical. That's why it's down so low, not the defensive. And then technology being the biggest loser. But energy and materials still holding in. They're still holding in. Materials is going to have its own problems along with energy because the commodity prices are fluctuating all over the place based on the war. So I kind of give them a pass. But to see utilities positive, that's very interesting. So let's jump into that and take a look at this chart. It's not only positive, it started positive, it's continued to be positive, it's going to stay positive. The market's correct, it doesn't. The markets fall apart, it doesn't. This just shows you that it's the majority, or I should say the minority of the large companies that's creating most of this chaos, most of the push-pull when it comes to the volatility day to day. And the fear, I hadn't seen any fear in these markets until the last couple of days. Once again, take a look at the VIX. It's up just over 17% in 2 days. Today it's up 8.5%. So it's a pretty good reaction to what's going on, I guess. Now, the tech sector, it's going to look just like the Qs, a little bit more pessimistic, although this doesn't look as bad because it did clear its 200-day moving average, but it still has this same resistance line that I just can't shake. It's got that same resistance line, so it's still technically kind of in a bear pattern. And it did get below this pivot point, which is right where we had the crossover. Now, if it can get under that, we're in for a little bit more weakness. I don't see how we can be or couldn't be. All right, let's get into some trades, but let me do my real quick finish here. So the market slipped below support levels, and I should say it gapped. It slipped. It wasn't. There's not a push to sell. There's no scary news out there. Some sort of the world's ending push. It's just the selling stopped, and it's exhausted. It's had the half of March's month to charge this thing above 2-3 moving averages and get it above 2-3 resistant levels, and it's just tired, and it just slipped and it fell. Bearish movement is more of a gap than a sell-off, so it's a gap. We'll see what happens. Do we gap again tomorrow, or do we try to climb back from where we are today? Sentiment, I'm going to move it to skittish from a strong directional move higher. It's one of those things, either it's super exhausted, or now that everybody's bought into the end of the quarter, whatever this may be, they don't know what to do next. But the VIX, it would be interesting to see. It would make me feel better as a bull to see the VIX just kind of climb higher, kind of float higher. But a 17% jump, it's above 25. It was just shy of 26 when I looked at it in 2 days. So this gap might be a little bit more significant than just the lack of selling, and you guys take that for what it is. So inflation remains high, Fed remains hawkish, cost remains high, demand remains high, energy costs increasing. Nothing's getting better on this end, folks. It isn't. And I think everybody knows that. But the markets are detached from it right now because the markets are healthy and fine. There is the argument to be made that the markets are looking 6 to 8 months ahead. If they are, wow, I'm ready for 6 to 8 months because I don't see how that money can continue to stay in the market when it's not in the economy, if that makes sense. All right, my 2 cents. So we'll see if that has an impact. Let's keep an eye on the minutes. I do think the minutes might have an impact on the market depending on the Fed's talk, or they call it the Fed speak, right? All right, guys, cool. So let's jump out of this and go take a look at some trades. And as you can see, we gap down and all these markets are just kind of staying flat. They're not really doing much, are they? Just chomping along. But we'll see what you guys have for us. We'll go from there. I'm really not looking for too much, that's for sure. On a day like yesterday, boy, I was ready to pull some bull bears and I didn't get them. If you guys remember what I said yesterday in the end of days, I wanted to get my bulls triggered, all of them triggered on Monday. I go to get into them on Tuesday and they all had turned over. So I have been hovering over the trigger without being able to pull it in either direction. And so I decided to step back and see where we go. All right. Let's take a look at some of the trades you guys are looking at. Oh, hello, Ian. All right, let's take a look at some. We got VST. We'll start there, see if I can do my best here. 14th expiration, 24 strike. Sold 24 strike. Expiration 1440. Diagonal call. Okay, so sold the 23. What'd you buy on the back end? 23. 23, 24. Oh, I like it. Awesome. Got a 23-24 diagonal spread. Great trade. The 23, let me read down here a little bit more, is a May 20th, I believe. Sold April week 3, 14 expiration because of Good Friday. Great trade, Ian. Super cool. Nice and easy. Gosh, I love diagonal spreads for that. And it's going in the right direction. It has been for 5-6 days. Cool. I'll put that down. VST on the bull side. All right, moving on. Because you have a couple in here. Let's make sure we get to all of them. PEP, PepsiCo. I should zoom in on these a little bit. Let's do that. That'll help. Sorry, folks. But, since you get it, you can zoom in on your own charts and figure it out. Right. Another looks like it's a 175 strike expiration to 1675 strike. Let's see if I got that right. 175. Yep. Sold strike of 175 for the same April. Purchased the 167.5. Very nice. Very nice. Yep. Right through here. And 170. What'd you say? 5? Just want to make sure I give it my best. Yep. Very nice. Same time frames. It looks like, folks. So May to April. Week 2. Another one. Really good. PEP. It's really interesting. It's really nice when I should say it's great when you can trade in the markets that are in front of you. It is. It's cool to see that I can. There's trades in both directions. You guys saw the list that we had. We had as many bulls as we did bears. If you just stay away from the big old noisy ones, stay away from Twitter, stay away from Tesla, Amazon, Google, Shopify, Spotify, Zoom, you'll be fine. All right, let's move it along here. Ian sent me a big old block. Oh, thanks. Ian said PEP is April 14th. Is the 22nd. Sorry. It's the 22nd. Yes, it's the 22nd. Okay, cool. So a little longer on that one. I guess you guys can make your own top-down approach, but it's a good chart. Moving on to WPM. 48. Calls, looks like. Nice. All right, all right. Okay, 48. I like it. I mean, it's staying above it, right? If this pulls back a little bit, you're still fine, but I like where it's staying. It's staying above it. So we got WPM on the bull side. Very nice. Let's keep reading here. Sorry, guys, I'm doing my best. It's kind of difficult sometimes the way that these come across. So, CME. Looks like we got a 240, 247.5 bull call spread. Okay, I like it. Good confirmation there. Let's put down CME on that one. Confirmed a bull pullback yesterday. Target above the 250, shooting for 247.5. So he's not even shooting for the whole 250, or whatever you want to call that, 252.5 up here. He's about in this mid-range. Excellent. Thanks. Let's move on to Cisco. We got ourselves a 53, 55, 57. Let's see if I get this right. 53, 55, 57. Right there. I believe that's correct. Hold this position as of today, and positions I got until Monday. So 53, 55, 57 on that's an August, or no, 8/4. I imagine that's going to be the 8th of April. Let me pull up my little calendar to double check it. I believe that's right. Yep. So it expires this week. Ooh, a nice little bounce would be sweet here for you, Ian. But, let's put down Cisco sideways. I mean, it could be sideways, but, boy, I'll tell you what, though. If that does break, and I hope it doesn't because you're in it, Ian, but I like how it's below the moving averages. Can't get above the 56. I'm going to put this down as sideways with a bear. CSCO. Because, boy, if that thing starts to drop below that 54 mark, we could have, let me erase this and try it again, a situation where we have this low base breakdown. But I do like it. If it can bounce today or tomorrow or whatever, then the butterfly still holds true. And what I like about it, Ian, you've only got 3 days left, including today. Nice. All right, I think there's one more in there. We'll take a look at, two more. Let's take a look at GE. All right, GE to the bear side. April 14th again, 95, 87 bear call, 95, 87. Come on, pen. Okay. Oh, you're almost at the 87 mark. Very nice. Right about there. 95, right? 95. That's a good chunk of change. Looks good. Yeah, and that could drop off. You might actually hit the 85 and bounce back because you got another week or so, or a week and a half. Who cares? It looks good. I like that one. GE on the bear side. Alrighty, and then we'll take a look at a last one for you. And it is a ABBV. Is that what that was? 160 strike, diagonal calls. Okay. 167.5, 160. Wow, you're already there. 1 day. Boom. Still looks good. I'll put it down on the bull watch. This has been something that's been really kind of funny to see our traders take. I know that Corey touts it every once in a while, and Rob will pull it up, and so on and so forth. And it's funny because it's just this stock that has never done anything but move higher, so it's pretty sweet. All right, man. Thank you, Ian. Appreciate those. Let's take a look at Roku for Sebastian. We got a bear put. Got in today, about $2. Did I give it too much time? Let's see. 116, 111. Oh, guys, let me get this pen back. Draw. So I can zoom in. Now we can draw. 116. Did I give it too much time? It might feel like it. This is kind of alarming. 9% in a day. No. I mean, even something like this, it can take its time. Now you might exceed it, but I think you're all right. I think you're all right on the time. I like it. Let me put it down to the bear. It's been a pretty good one for a while. I know, Sebastian, you've liked it for a bit. And it's been a pretty good trade to the downside. All right. Joe, RBLX. Got a condor. All right. April 22nd, so about 3-4 weeks out. Let's find out exactly where we are at. 2.5 weeks. Sorry, folks. We're already April 6th. Well, to answer your question, Sebastian, April 14th is a week and a half. You did not give it too much time, I don't think. So Joe's got 53, 49, 45, 41. Let's see if I can do my best to get there. All right. I wish I had a quick fix to jumping between pin and cursor, but I don't. 53, 49. Let's call it about this and that. And then we'll do 45, 41. Ooh, which is right about where it's at. And just shy of 41. I mean, I still think you're all right on this, Joe. Max gain is $4. Play with the strikes, going a buck lower or higher to see if it holds the 20 SMA. Sure. Be patient with this. You know what I mean? Let it. I mean, because it could float lower, and then if it turns around, that's great. If the markets do fall apart, this will actually get to your lower leg, and then you know how to adjust it or get out of it. Just follow your rules. But I mean, it could easily flip right around and turn into something sideways. So keep that in mind. Just be patient with it. Okay. NU for Dan. And on the side note, folks, butterflies or I should say condors are very difficult to manage. They're very emotional. I mean, you're risking a lot more than you can make, and then when they start to get out of line, they fall in between those strike prices. You see a huge what's the word? You'll see a huge loss, even though it's not one that you've taken. But it's just crazy to see it. It kind of freaks you out. Okay, it's basing. Push to the next leg up. 165, 160, 165, 175 butterfly if it can get up. Let's see. 160, 165, 175. Woof, Dan, you're going for it. Okay. Yeah. Make sure that it really pushes hard. It's got to get above this. If it can get above that, then I'm okay with the 160, 165, 175. Or at the butterfly. That's a pretty big one. Cool. All right. Today's a little ominous. Kind of a bummer, isn't it? Be nice to see this candle at least stay at the 150 mark. Doesn't mean it's all over, but keep it on your bull list. I'll put it on our bull list. There we go. All right. Long puts on HD. Let's take a look, Zach. Ooh, yeah. Well, I mean, it's nice to say right now, but what's tough about something like this is on a day like today, the volume is going to be super high. I know that you made some. You entered into a Monday. No, that's good. Okay, I got to keep reading. Zach had a couple more comments. 305 April puts for the 22nd. Price target of 280. I'm fine with that. I'm totally fine with that. No, that's great. Now today, folks, you might feel like you're chasing, but what's cool about that, if you want to absorb volatility, do a vertical spread. That way you can negate that volatility. Now you're going to be stuck on it. It takes away your flexibility. Like Zach here got into it on Monday, and it's looking wonderful. And Zach, be patient with this one. It's now working for you. So now's the time to squeeze it, right? Don't or take half and squeeze the rest, whatever. But if you guys are looking at it now, diagonal, vertical, butterfly, going straight puts on this today, not so much. So keep that in mind. I'm going to put it down though on the bear because I do like the confirmation of the breakdown today. Nice trade. Thanks, Zach. Great work. Oh, moving on down. Something to watch. Owen saying IWM and the Qs. Well, actually, he said more than that. Let's see. The weekly charts seem rolled over on some of the majors here. Let's take a look at those weeklies. I don't look at these enough, do I? Yeah, a little bit of a confirmation there. You are above that 50-day moving average, though. I could see an easy hesitation there. It'd be nice to see it just kind of roll over and fall, right? The Russell looks much better to the bear side. And then let's take a look. You said the Qs as well. Yeah, I mean, and that's the perspective that I'm looking at. And you guys have heard me tout this. I don't know. It was probably last week. If it wasn't, it was at least 2 weeks ago. But, when you see a corrective move here, and I know that was probably COVID, so on and so forth, but my heavens. What's 50%? If you guys just snap your Fibonacci's here, 50% is what? Right there? And we didn't even come to that yet. So, can I expect, rollover, maybe a retest, maybe back, absolutely. Absolutely. It's just one of those things, folks. We can't do it until it does that, because if we do, we're going to get slaughtered on these moves to the upside. That rally that we had in the end of March, and I'm so proud of our bear traders that actually sat on their hands, because you would have just got slaughtered, right? I mean, that was a massive move to the upside in 2 weeks, 2.5 weeks. But today looks a little bit more ominous. Here we go. Here it is again. I mean, what's red here, folks? What's red? It's not anything on the other side. It's just those big, giant, large, volatile companies. So that's kind of what's been pushing and pulling the markets over the last little bit. All right. Okay. Cool. That's it. Let's get to typing in some trades, and I'll cut you guys loose. How are we doing on time? Oh, we're pretty decent. All right. VST. Good trades. Good trades out there, guys. I like them all. I like both directions. I think it's cool. As long as you're doing it according to your plan and rule, there is lots of there's money out there. It just depends. And once again, I'm looking at all of these, and none of them are Tesla. None of them are Peloton. None of them are, and I'd love to see that. So thanks, guys. Great work. Let's see, 1, 2, 3. I'll share this with you. There we go. And go through that list. I only showed the charts on some of the ones that I liked, but all of them look pretty decent. So go through the lists, see what you have. I like this Cisco. I really want it to stay in the butterfly for it to close for you. And it might, if it bounces up, you're going to look great there in the next 2 days. But if Cisco does roll over, it could be an opportunity to break down. But as of now, we'll keep it as a neutral trade. So thanks for that. Thanks, guys. I appreciate that. Well, that's all I got for you. Thanks for joining me. If you guys got any questions, you know how to go get a hold of us, and we'll talk to you next time. All right. Bye, everyone.